you place the probability of like the hyper-Bitcoinization scenario relatively low, and your base case is a more moderate scenario. I would tend to agree with you there, but I'd love to hear you flesh out, what is your base case? Like, what is your most likely picture of a world where Bitcoin becomes integrated in the world we actually live in, not the world we might want to live in, but in the real world? How does that play out? What's most probable to you?
Let me first sow the seeds for a little bit of skepticism about hyper-Bitcoinization, and then maybe we can speculate about possible paths that either lead to it or don't. Here's one base reason to be skeptical. Bitcoin is no longer young. Bitcoin is 15 years old. And of course, it's seen a stratospheric rise in market cap and in the price of its native asset. And yet, when used as a medium of exchange or unit of account, Bitcoin has not seen a stratospheric rise in the metrics that maybe Bitcoiners 15 years ago would have hoped for. For example, energy being priced in Bitcoin, or other raw input goods for production being priced in Bitcoin. Saudi Arabia isn't selling oil on the open market and quoting barrel prices in sats. They're not. The hyper-Bitcoinization scenario posits that they eventually will. So one question we might have is, well, how long? What is the time frame before we know that this hypothesis has been tested and either confirmed or disconfirmed? That's a question for proponents of inevitable or highly likely hyper-Bitcoinization to answer.
Yeah.
Reactions to that first, and then maybe we can poke a little bit deeper.
Well, I personally don't think 15 years is that young for a new money. That's what comes to mind at first. Like, you know, if I'm thinking about how long it would take for a new money to become widely adopted, specifically a new technology, I think it's made extraordinary progress from basically no price to now over $1 trillion in market cap in 15 years. You know, I think it's very, very young still. So that's my first kind of pushback a little bit.
Mm-hmm.
I don't know if Steven, do you have any pushback?
Yeah. I would generally find myself probably more aligned with what Andrew put forward. I mean, you know, you could argue, okay, maybe do you want to see 30 years? We could see 30 years. But even when you start talking like, okay, let's say we say 15 years is not a lot of time. Okay, fine. So that changes what we mean by hyper-Bitcoinization. Do we mean in 150 years we might get there? Okay, I mean, fine. I don't like to make predictions about the deep future, but I'm not going to live to see that. You know what I mean? And that changes kind of the ground of what we're talking about. So I think if you say 15 years is not a lot of time, okay, like I can get that. But it does push this kind of event horizon way out into the future, and not as this like imminent thing, which is going to happen in the next 3 years or happen in the next 4 years. And that's
I would agree with that, you know?
Yeah.
I don't think it's going to happen in the next 3 or 4 years.
Yeah.
But yeah.
When trying to project, one variable we might look at is, since supply is fixed for Bitcoin, look instead at demand and the fundamental sources of demand. And I think there are two we can look for: central bank failure, or irresponsibility more generally, and authoritarian rule. So then the question is, if we're tracing these over time, we just have a simple chart, we have two things going up or down over time. Can we expect these things to go up, to go down, or to stay steady over time? I'm not going to make grand predictions. Maybe a guess is that they'll at least go up a little bit. And if that's right, then fundamental demand, or at least the sources of fundamental demand for Bitcoin, go up. Now, that assumes that there aren't substitution goods for Bitcoin that could eat up that demand as well. My own view is that there aren't, that Bitcoin is actually quite special. But to the extent that you think that there could be something else that would satisfy that demand, to give an alternative, in the case of central bank failure, a decent money, or to give an alternative in the case of authoritarian rule. So those are some variables that I think, if we want to model the future in a kind of responsible way, not just fantasize about hyper-Bitcoinization, those are the ones that I would look to.
So the reason where I want to dig a little deeper, and the reason I asked this question is, to me, like, hyper-Bitcoinization is like a wonderful tail call option. If it happens, like, wonderful. a guy that likes Bitcoin.
You are prepared.
Like I've worked at, my whole career is in Bitcoin. I love the asset, right? So like, wonderful. That's a positive outcome. But the reason I asked the question is not to say like, oh, this isn't going to happen or blah, blah, blah. I'm more interested in fleshing out, if we assume it's not going to happen, why are you still bullish? What is the moderate scenario that leads you to view Bitcoin positively? Because I think people can sometimes get into a very black and white view with it, where it's either hyper-Bitcoinization or it's nothing. So the reason I ask this is not to like speculate on probabilities of that outcome, but it's to say, what does it look like where Bitcoin has a positive impact on the world, but it's not hyper-Bitcoinization, and why is that good?
I think the answer to that is reality as we know it now. We can build a positive case for Bitcoin by looking at what has happened already and what is happening now. We don't need to speculate about the future, actually, to come to the conclusion that Bitcoin is good for the world. We look instead to the balance of evidence about how it's being used now and whether that's good or bad. One of the central claims of our book is that the balance of evidence, not looking to the future, not fantasizing, and not even modeling in a more sober way, but just looking to the present and the empirical evidence we have, suggests a pro-Bitcoin stance and gratefulness that it's here, and just a fundamentally pro-Bitcoin view.
I would imagine, though, that a lot of that evidence is the utility that it gives to individuals, though. It's like it helps individuals. It helps people leave oppressive regimes, et cetera, et cetera.
That's right.
What benefits do you think it has for systems, though, is what I'm curious about? Because I think a lot of Bitcoiners, there's the individual component, and that's important and valuable. But there's also this view that has always been very compelling to me, that actually it has a complex systemic effect, not just on individual lives, but the whole of the economy, the whole of the political apparatus, the whole of these things. Do you see in that moderate scenario, do you see positive effects on that level? Because that would be one thing when I look today, like I don't necessarily see that the presence of Bitcoin has balanced out money printing. But when I look to the future, I can imagine a world where hyper-Bitcoinization does not occur, and yet Bitcoin serves as kind of a check and balance on money printing. The example I would give is there's this concept of inside money and outside money in monetary history. And so this goes back to the gold standard. And so basically, like if most coinage, most creation of coins in the kind of monarchy era of England was actually gold that was brought in from traders, from free market operators, and brought to the royal mint. And the king would stamp his seal on that gold and make coins. And those coins would trade for a slight premium versus bulk gold. And so traders had an economic incentive to bring that gold over. But the unique thing about coinage is there's inside money. Coin with the king's face on it trades at a small political economic premium, but you can melt it back down into gold and fuck off to Spain or go, to another country. And you can kind of opt out of the system with your bulk gold as you've melted down the inside money into the outside option. And that represents kind of a check and balance on the unchecked or irresponsible operating of the king in this scenario. What has always been kind of interesting to me is this view that even if everyone isn't using Bitcoin, there are still fiat currencies, there are still these things, that there's a way that like Bitcoin functions as a canary in the coal mine of like, whoa, they're really printing to excess and the price of Bitcoin is spiking in that currency. And if Bitcoin as an asset is widely enough adopted, that starts to serve as some sort of check and balance. I'd be curious if you agree, disagree, have additional context on that more systemic view.
One thing that we need to know to answer questions like this is what is the counterfactual we're comparing the Bitcoin scenario against? So one might be tempted to look at the last 10 years of Bitcoin history and say, wait a minute, central banks are still failing. Every couple of weeks, some cock-up happens in some centrally managed currency. And authoritarians still shut down bank accounts for people who disagree with them. So maybe Bitcoin isn't helping. So that is for that conclusion to follow, though, we'd have to know, well, what would the world have been like had Bitcoin not been present for those last 10 years? It may well have been quite a bit worse. And in fact, this is the view, surprisingly, of David Andalfato. He's an academic economist who used to be a economist working for the Federal Reserve in the St. Louis branch. And he started to write about Bitcoin maybe in 2011 or 2012. And he's got this nice little quotation. We've got it somewhere in the book. I forget where it is. But he says that Bitcoin's ongoing existence serves as a check against the Federal Reserve. That was his view. And so far as I know, he hasn't changed his view. So it might be tempting to have a kind of skeptical stance towards Bitcoin has been a check. But you don't know that it could have been, or that it wouldn't have been far worse had Bitcoin not been present for those last 10 years. So even if we're taking a super pragmatic, narrow look only at the past and present and not looking at the future at all, I still think you could make a case that Bitcoin has served as a check. And the concrete way that check manifests itself isn't just in reduced money printing or reduced irresponsible central bank activity, but it's the fact that people can still exit. As long as that's still possible, that's evidence that the mechanism is in place. The canary is still alive, so to speak.
As long as
the canary is singing.
And that was what coinage brought. Like, coinage inherently bestowed the right to exit. And that is one of the things that I look at with fiat, that fiat has taken away our right to exit in a not in a totalizing way. You can obviously buy different assets and shuffle them around the world, but it's constrained on a base level. The base money, it's much more complicated compared to the simplicity that, like, with coinage, you just could say, wow, the King of England really isn't doing a good job here. I'm going to move to France and I'm going to take my gold with me. And obviously that's fraught with transportation risks and other things, but you could do it. And I intuitively, the vibes are right. I like a world where people have that option.
There's data too, Stephen. And when data and vibes unite, you know you're on the winning side. Here's a recent example. In April of this year, overnight, while people were sleeping, the Central Bank of Egypt adjusted the peg for their local currency by something like, dropped by something like 20% against the US dollar. It's just like a red line, flat down. And what they did the next day was they blocked the exits. In particular, people who wanted to buy stable coins, who wanted to buy Bitcoin, and people who wanted to transfer to US dollar denominated banking accounts. They blocked those exits. And what else happened is that Google trends, people searching for Bitcoin, they spike up the next day. So these two things are bits of data that suggest that the exit option is at least being looked for. It's known, it's understood by central bankers. Now, they still did something very naughty. They did something very naughty, but it could have been worse. And maybe some people have already escaped, and maybe next time it won't be so bad. Maybe it would have been worse otherwise. So there's some data that unites, I think, with the vibes there.
The fact that they even did that implies that they are watching it, implies that they are aware that it is a factor in the exit option, which makes it much more reasonable to say, like, hey, yeah, maybe Bitcoin is already serving as a check and balance to some degree. I actually like that a lot.
It happened in Argentina as well with the IMF, where they put in their clause saying that banks can't service any kind of crypto. It's like a red flag right there. And like, I think about history. I wrote a whole paper on the Bank of Amsterdam. The Bank of Amsterdam back in the day when it failed, part of the reason was that it leveraged up its balance sheet. Public trust was lost when the unsustainable nature of the fiscal side of things couldn't recapitalize the central bank. Loss of trust in the money, they all go into metal coinage. And so the same thing happened back then. And the Biz just wrote a paper saying, I'll even read, they say, we've seen in the case of many emerging market economies, or potentially through cryptoization, the coordinated switch away from bank money into cryptocurrencies and private stablecoins. So they know that this is happening, and they say, the fiat currencies need backing, and they need modern central banks that have sustainable public finances. And so you've heard from Janet Yellen, from the CBO, the same word from Jerome Powell. I mean, not Janet Yellen, Jerome Powell. Unsustainable. This is unsustainable. And so I think we are headed down this road of like Bitcoin being a check on, reckless fiscal policies and central bank policies, and they already realize this, but I don't think the general public realizes it yet.
So this is really interesting, and those are great points, because it almost highlights there's this like divergence or contradiction between the seriousness in which the central bankers are relating to this as a real thing, that is a real check, that is a real option, and the derision that so many people in traditional finance would look at, like the argument that Bitcoin is already imposing a check on monetary authorities as like some cuckoo crazy Bitcoiner propaganda. And yet you almost see a more serious tone from the actual people responsible for monetary policy.
Especially in the part of the Fed. In fact, I think the Fed has a better research arm than does, for example, the European Central Bank. Those guys are clowns, honestly. Their blog posts are no better. Their blog posts are bad, and honestly, their blog posts are no better or no worse than their
bottoms. Confirmed by the
it's
ECB.
the same guy too. It's Fabio Panella or something writing these terrible blog posts for the ECB.
Short Fabio.
Fabio.
The Fed researchers tend to be better. And in fact, there's a Fed research paper on the Lightning Network as a medium of exchange. And it's quite good, in fact. And it tells the truth. So there are people on the research arm side of central banks who are fully aware of competition, and the honest and well-intentioned ones among them don't actually view that as a bad thing.
Yeah.
Competition is actually good in every other sphere of production. Why would it be an exception when it comes to money? It isn't, in fact, in my view. And on the part of many economists who've thought about this in a pretty serious way, they would agree. And some of them even work for the Fed.
Reminds me of Javier Milei said something very similar recently. Let's return competition to money.
Yeah.
It's already here. That's the good news.
Yeah, good point.